Hey everyone, Dan here. We are just about a half hour after market close on Monday, April 19th. As always, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's get into it. So today we're going to take a look at GameStop with a fresh set of eyes, see where things stand, look at some areas that might be interesting, and unpack the trend analysis as well as the indicators. I will just say that if your main focus in the GameStop craze is the short squeeze or the gamma squeeze or the news cycle or anything along those lines, this is going to be purely what the chart says, completely irrespective of any of those other things. So if that's really what you're looking for, then there's probably hundreds or thousands of videos that will speak to those things. But this is just going to be what the chart is telling us. And then the other thing is, if you want to hang on through the end of the video, I'm going to give an update on Dogecoin because I put out a video over the weekend basically talking about how I've been trading Dogecoin and some ways that I had found success. And I have a slight tweak to that I want to make folks aware of. So if you're into that sort of thing, then hang around and I'll add that on to the end of the video. But let's kick things off with GameStop. So here's where we are right now. We're at the 64.24 mark. You'll see some movement there because, like I said, it's during after hours. I figured we look at the 30-minute chart just to get not too far away from the, I thought maybe it was a nice mix between the micro and the macro. So we'll see. Hopefully that's the case. But let's zoom out here a little bit, get a little bit better of a picture, get about a trading week or more in here in view. Okay, here we go. So, the first thing that I would note, we have seen GameStop fill gaps previously. And so I would just be aware that if it comes down to fill this gap, it's going to be pushing 160. So nothing traumatic, but there is a gap there to fill. So I'd be aware of that and just know that if it's falling, the way that I like to think about those is one of two ways. One, if you're looking for an average down or a dip by entry or something like that, that could be a good dip to look for, that it's going to come down and dip into that zone. The other way I like to look at it is if I'm holding and trying to, kind of get myself to a place where I'm making smart entry and exit movements. If I see the price coming down to fill a gap that I'm aware of and that I'm comfortable holding through, then, just knowing that the gap is there and watching the gap fill can potentially prevent you from panic selling or thinking that it's kicked off a crash or something like that. And I'm not saying that it couldn't do that, but I mean, it's a pretty minor movement. It's just a few dollars. So that's how I would think about that gap for the time being. And let's take a look at some levels. So these levels that we're going to chart are essentially support and demand zones. So support zones, supply and demand zones. You could also think of them as support and resistance, which is why that slip of the tongue just occurred. But, the supply and demand is essentially a supply zone is where the price has sort of topped out and will come down because there's more supply than demand. And a demand zone is where there's a lot of demand for that stock at that price. So for example, right now, this one that I just charted, 152.60, I would consider that a support zone, but I'd consider it a support zone because I would expect a bounce if GameStop comes down to that level, because it has shown in the past here and here and here that there is a lot of demand and people tend to buy up the stock at that price and push it higher. Okay, those levels get sort of extra superpowers if they were previously resistance zones, which that has a little bit of resistance here, but it's not like there were tons and tons of areas where it was resistance previously. But you'll see even back here, which I wasn't even looking at when I charted that, it was previous support in these zones too. So, and a little bit of resistance there. So I would look for that one as sort of a little bit of a further away support zone, meaning than the gap. And then if it does come down, I would look for it to get caught pretty safely around this area. So you could think of this as something like a stop loss if it gets caught under there, or a cautionary zone, which if you wanted to take a more aggressive stop loss, like pull the trigger faster, then you could take that 152.60 to be that. And just remember, when we chart these price targets, they aren't that typical, like I see 138.52 and so I'm going to set my stop loss at 138.52. The way that these work is more so that the price can dip below. Like if it had happened here, for example, like say this was charted and this was your stop loss when this price action was happening, you would have seen the big sell-off coming right down toward your stop loss. It bounced off, tried to make a push up, and then came back down and dropped below. But it really quickly recovered. It never dropped so far below the zone that it wasn't treating that zone as resistance. So as long as it's close enough to the zone underneath it that it's treating it as resistance, then that's where I consider that it still is interacting with that zone, and that it has neither sort of gotten through that zone, nor has it gotten over that zone. So it's not support or resistance. It's just sort of like waffling around that area, sometimes support, sometimes resistance. So that's like a long-winded explanation to say, if I were to set a stop loss with my brokerage, it would be something like, maybe 135, 134, even a few dollars away from that 138. And then I would feel confident that if the price hits that number, that it's because it fell pretty far below the 138 level and probably has lost it as any chance of near-term support. And so then the chain of thought would essentially be, so I worry that like a bigger sell-off is coming, and so I take the stop loss and just look for a re-entry point on a bigger dip. Okay, so hopefully that makes sense. But let's look for some other areas. So I think we can look for pretty solid support. This area is pretty good because there's all of this support, but there's also all of this support. Previously was resistance in this area, was a semi-support zone for here and for here even. So I would go with that. 162.69 is your immediate support for GameStop. And then as you move up, I'd look for a little bit of stickiness. There's resistance zones currently and historically right around this point. The 166.50, and then you probably have some additional stickiness here, previous support there, turn to resistance here, and then obviously where this topping out has happened, it's really going to want to establish past this topping out, which is not only this and this, but it's also this topping out here and this previous support there. So that's where I say these zones sort of amplify their superpower when they were previously support and now resistance, or previously resistance and now support. Those areas are of extra interest to us. So that's the first one I would say is super interesting, that 173.93. So look for it to bounce off of there, or potentially it has eaten up all of the sell power, the sell strength from this previous topping out, and maybe it will blow through it because there isn't additional sells that are queued up for that level. And let's see. Then beyond that, I would look at this zone here, a 180 targets. If you wanted to set some price targets higher. I know I'm preaching to the choir here if you're watching this video, but GameStop can have these really erratic moves up where it just kind of skips all these price zones. So that of course can happen. These are more so if it continues to make a slow but steady bullish movement, which is can be a nice sustainable way for a stock to move. So I would look for it to hit these price targets. That gets us over 200. So that's the next, say, $60 or so worth of price targets as I see it on the bullish side. Again, on the downside, 152.60 for a cautionary zone. or if you want to pull a trigger around there for a stop loss. But otherwise, I would think you're pretty okay to see if it bounces off that 138.52, if that was within your risk tolerance. Okay, hopefully that makes sense. There, in an ideal world, there'd be a channel forming here, but because of this previous top, there's just not. It would be nice if we could capture kind of this. I think if it continues to build in this area, we can form a channel and just it'll cut off. I'll show you what it will look like, and then we'll just ditch it. But there is still the potential that this channel forms here and here. And that what'll happen is as more price activity comes to test the bottom and then to test the top, I think we got one more test on either side. I'd go ahead and call it a confirmed channel and just say that this accounts for, that 5 to 10% of the price activity that occurs outside of the channel on basically any channel ever. So, but it doesn't mean that it broke the channel. It doesn't mean that the channel doesn't exist. So that's the one that I'd be looking for. But I don't think it's quite confirming that channel yet. If we want to look at some indicators, we can first look at some MAs. The 12 just crossed below the 20, so that's a slightly bearish sign. But, sort of in the pre-market, the 12 and the 20 crossed over the 50, so that's a bullish sign. Still on the bullish end of things because the 180 is underneath the price area. So still on the bullish side of things, though the most recent price activity looking slightly bearish, which you don't need MAs to tell you that. You can see this uptrend that we were just channeling and then a little bit of a sell-off today. But again, if you look at that channel, we are pretty much in the mid to lower range of the channel. So I think even though it sold off a little bit today, it's still okay. So we're exactly mid-range on the RSI, 50.71. Is that the most up-to-date one? Let me see. Sometimes this is weird. Yeah, okay, 50.71 right now. So neither, good nor bad, if you want to look at it that way. I would watch for if it does dip below 30 on the RSI, as we saw here and as we saw here, it does have a tendency to not really tolerate that for very long. So that might be a good dip buying opportunity. You might have to hold through a second swing of the 30. Let's see how often that happens. Because here you'll see there was a double dip into the oversold territory. And then here there was another double dip. This one, if you count this hit 31. So you could count that. So it looks like, yeah, and then here also. So, GameStop might be a frequent double dipper, which just means that you may not want to buy in on the first break of 30 or even very close to 30. You might want to wait for it to push off of that one and then buy the second dip. So that, in other words, you're not buying here, which would have put you in this price zone, but you're waiting for the second dip and you're buying here, which would have put you at a much better entry point given the later price activity. If you buy in at the first one, just know that you may have to hold through more downturn. So another way to approach it would be, I'm going to buy in at the first break of 30, and then if it does double dip, I'm going to use that second dip to average down. So it's another way to play that. And then look to sell out toward overbought territory, over 70, because we see that frequently happening as well. Here, a bunch of tops when that hits over 70. Another way is if that channel forms, draw the channel in and then play the tops and the bottoms of the channel. Dip by the bottom of the channel, take profit at the top of the channel. Okay, so that's the RSI. So let's swap that for the MACD. This is the last thing that we'll look at. Let me double check on this. There was something I think I saw earlier that I wanted to zoom in on. So I think, yeah, so down here, the yellow line is the MACD. And you'll see this candlestick here and this candlestick here. So the second one, the more recent one, had a higher high than the one before it. However, the MACD went from 0.82 to 0.68. So the MACD trended downward when the actual price of the stock was making a higher high. And then it looks like it happened again here too, actually, 0.57, and that was a higher high slightly, but still. So that's what we call a bearish divergence. So I'd be very cautious with that. Nothing is 100%. So like keep that in mind, but just know that a bearish divergence can signal a sell-off that's going to happen. So if we come down, I think there could be a few things in play. One, coming down to fill the gap. Two, there was a bearish divergence here, so the selling pressure is still high even though the price is rising. And then we may want to look really hard at getting caught by this cautionary zone, 152. I wouldn't be surprised if it only dropped down to something like 154. So, it's a zone. It's not the exact line. A lot of times it does bounce exactly off the line, but you should still think of it as a zone. And also, when there is good price activity, like good bullish price activity, the zone that it bounced off of before, it won't quite test it again when it comes down. So that'd be nice if it just came down to like 154 or something, because previously it came down slightly below the zone. So if it just came down to 154 and then came back up, that could be a good bullish sign. But I'd be very cautious of that bearish divergence that we see there with these 3 higher highs in a row, all while the MACD was trending lower. On the other side, well, no, I guess that's all of our indicators, huh? So, okay, so that's what I would look for from GameStop. Good luck if you're in this one. I definitely wish you the best. It's been a valiant effort so far. So lots of ways to play this one, lots of reasons to play this one, and it's just an interesting time in the marketplace for sure. All right, so if you were just here for GameStop, then feel free to subscribe to the channel and hit the like button and then and then leave. But if you want to hang around for Dogecoin, that's what we're going to chat about right about now. This was the channel I was playing earlier today. As you see, it started to hold this during power hour, and it was a nice dip buy, sell at the top, dip buy, and then it didn't come back to the top. So all channels break eventually, right? So let's get rid of that. We don't need it. But basically, what I'm looking at right now is these are my immediate support zones for Doge. They've been holding up really well. And that's not what I wanted to talk about. Basically, on my video that I put out over the weekend, I was talking about taking entries when the RSI, which right now is at 38, when it dips below 30, and then selling out when it goes over 70, much like we were just talking about with GameStop, actually. What I sort of talked about in that video as well, though, was kind of poo-pooing the effectiveness of the MACD. And the more that I watched it yesterday and today, the more I have kind of amended my view on the MACD's consistency for playing Dogecoin. And the way that it really makes the most sense from what I've seen is one of two ways. So one, often because Doge has been on a pretty good run today, it's up over 15% today. I don't often get dips into the 30s. So often it's coming down into the 40s, and that's its version of 30 right now, because it's just on such a bullish trend that it's not coming all the way down into the 30s. So one way to play that is to see when the bearish momentum starts to wane and it's down in the 40s. So you'll see it here, for instance, right? This was 41, 40, 41, and the bullish momentum picked up, but then it quickly started to fade and the price started to come up. And so that could have been a good signal, but especially these crossovers, when that sort of thing plays out, have been like a solid added advantage, especially when the histogram is in the negative. So when there's been a crossover of the MACD crosses over the signal lines, the yellow crosses over the blue, and it's in the negative territory, meaning it's underneath the histogram, that's been a really good confirmation of time to buy. And so if we take the whole time frame into play, for example, Here, it came down just below 30. So that, in any case, would have sort of made me think about buying. But if you see at that time, the the bearish momentum was picking up steam, okay? And then after it came down to 29 on the RSI, it jumped up to 38, and the bearish momentum started to drop a little bit. And then 39 RSI, and then 34, and then 38. And then the crossover happened, okay? And it was underneath. So you could have bought in at the crossover, and the RSI would have been at 49, so much higher than we've been talking about. But you got a crossover. You saw all of the bearish momentum lose its power. And then, picking it up there, you would have been at about, say, 39, 32. And then if you came up until it crossed over here, you would have been about 39.82. So again, these are funny numbers because they're so small, but they represent good, consistent percentage changes in the stock price that you can play repetitively. So that's what I'm looking at right now. See where the momentum is. Like right now, I would not buy in at this moment. RSI is getting close to 30, but the bearish momentum is increasing. So what I'm going to do is I'm going to look for it to drop below 30 if we get there. We may not, but I'm going to look for that momentum to start to fade. And when the bearish momentum starts to fade and the RSI is in the 40s at this point, then I'm going to take a buy because, like I said, it's been on such a big uptick that it's just been very rare that it even gets below 30. So you're actually missing out on a lot of potential plays by enforcing that really hard rule at being below 30 on the RSI. So factor in the MACD, in my opinion. It's been working for me lately, and it's been a better way to play it. But it'll be interesting to see what happens tomorrow. See what all the hype is about for this 420 day. All right, well, in any case, thanks for watching the video. I wish you the best of luck this week with whatever you're trading, and I will see you in the next video.